Hey, happy last day of August, Bob Trade Genius. And I'm going to go over something really cool. So, if you're just a casual listener, I'm going to show you what we've been coding and automating. Basically, our multi-variable, trade signal into one code, and so it's visual for everybody. If you're interested in Trade Genius, you probably want to join us sooner than later. And if you're a customer, just pay attention. And we're going to do a private video with all the settings that you'll be able to pull down from the chat room, so you can get your settings set up. And also, if we're going to be doing a purge of the TradingView indicator, so make sure that you have your TradingView name into Matt, sometime this week, and so we can validate that you're active subscriber. And if not, we're going to make sure that only people that have been active here are gonna be able to get these signals, and you give you an opportunity to sign up, because this thing is money in the bank, and it's been pretty cool. And we've just been trying to take all the variables out that require judgment, and we probably have one or two little more tweaks to go, but we're pretty excited about where we are. And it's also variable too, so you can actually, once you get comfortable with the system, you can actually modify the the inputs to match how you trade. And so this is the standard setup that I'm going to be working from, that people can follow, and then once you get more comfortable, you can move on your own. So the way I look at things here, this is SPX USD. This is like a variant of ES. I don't want to pay the exchange fee that is required by them through TradingView, so I use the derivative of it. And it varies a little bit, point or two or so, depending on when the contract starts. Towards the end of the contract, they align with the futures, but that doesn't matter. Once you see the trade, you flip over to futures, you make your trade. You can use this to trade Nadex. You can use this to do day trades on SPY, and you can use this to do day trades, obviously, on futures. And we've optimized this for the ES, for crude, and for gold. And so it's a tremendous signal. I'll show you all three. And so what I like to look at is this is the action from 24 hours. Now, we don't trade between 4 p.m. and 11 p.m. Pacific time, although the signals are working. We went back and forth. We had these a couple years ago. We've had these things turned off, but with Asia getting more active, there's opportunities now showing up to trade that time period. And so, how I always look at it when I start to trade is I look at the linear regression line. Excuse me. I look at the linear regression line to see how it's aligned. And right now, if you look at it, it's pretty much dead flat here. We've been in a chop fest. So that tells me that I'm probably okay trying to go either long or short. And I'm on a 15-minute time frame here. And so what I'm looking for, it doesn't take rocket science to see it. If I see the blue triangle, I'm going to take a peek whether or not I want to go take a trade long. And if I see a red triangle, I'm going to look to either go short or cover, and vice versa. Either go cover a short or go long. So, but typically the action really starts at 11:30, 12 midnight Pacific time, so 3 o'clock East Coast time, and I have no clue what it is over in Australia. I think it's like 3 days before or something. And you go ahead and you get this buy signal here. And the next thing I look at is these are two moving averages that are lined up. And one of them is a longer term moving average that I call it a bull bear line. And this one's more of a signal line. And we might code this in next. But I see the blue thing here is that we're relatively in the blue line here. Now this signal here hits. It's the next bar that you're going to take action on. So this will clear at the end of this bar, just so you know. So it's not It's really this bar hit. So you'll be looking at this bar here, and then I just take a look at the faster moving average here, and I will typically wait until this thing turns up to take the trade. And so if I'm trading futures, I'm happy to wait for this bar here, okay, because you're typically scalping. And if you're trading Nadex, then you're going to be taking that bar, and you just have to not be wrong. And then runs it all the way up to here. This is a linear regression line. This is a center line, 1, 2, and this is 3. Okay, so if you know anything about bell curves, is that if it gets to 1, there's a 50-50 chance, approximately, for you math guys out there, that it'll come back to the center. If you get up to here, you're over 90%. If you get up to here, you're like in a 97% tile that is going to fade back in. So these are things to think about when you trade. So at 3 o'clock in the morning here, we hit 2 standard deviations and a sell signal. And I don't care what this does at this point, because if it gets to here, it's a high reward trade for it to reverse down. And this is where you would take a short, do whatever normal risk tolerances are, and you just run this bad boy down until it hits whatever criteria you want it to hit. Maybe you close in the center line, maybe you wait for a buy signal, it's up to you. So, or you trail it and you may get pulled out on one of these candles. But what the point is there, this thing plummeted down to this area here. And one of the things that we coded into this too is that one of the things in our system that we did not like is that we would get these reversal candles, reversal buy signals when it was waterfalling. And so we went ahead and we put basically a kind of a tachometer in there, basically look at rate of change, and it would suppress the buy signal until we see that abating, okay? And that's what you see this circle here. This circle here is saying this waterfall has abated, okay? And we got a buy signal here. So, you had a couple choices. Because it's plunged below the 2 standard deviation on the minus sign, a great place to go ahead and put a buy in. And if you know anything also too, Europe was closing. So a lot of people probably thinking, oh my gosh, the market's going to crash here. And it never does. I should say never, but 99% of the time you're going to get burned shorting into this move. And we got a buy signal. We got confirmation that the waterfall is over, and you took this trade on the standard deviation 2 minus to go long. And then you just ran it up, and then the rest of the day's chop. So you're going to make most of your money anyway, but between 5 in the morning my time and Europe closed at 9:30 my time. And then the only other time you look at the market is you look at the market the last 2 hours of the day. But it was a Friday going into a holiday, so it just made 0 sense to be trading anyway. And so, but see, it gave 2 profitable signals if you're a scalper. So that's that, and I'll show you that it's not just a fluke here. So then you go ahead and look at gold. GOLD is also a derivative of GC, and works the same way. Now gold had a little bit of a bias to the downside, so you're going to looking at the day here. The first thing it does right away, they're pushing the market up. Likely they're pushing gold down. We got a sell signal past the 2 standard deviation. You could take that short into a buy signal. Now I'm not buying now because it's leaning to the downside, and then so it pushed up again with 2 standard deviations, crossed down again. Okay, just use whatever your risk tolerances are, and then it did it again. Now the signal didn't fire here because this wick here, it closed before our signal did the calculation, so it just didn't recognize it as another sell signal. But for me, if I was looking to short gold and it crossed the 3 standard deviations to the high side and came back in, I would have took a short here. All right, and then it plunged all the way down to the bottom, and then you would have covered for the day. But I like to trade with the trend. There's no need to go counter trend. There's always going to be something that's going to be trending that you could just stay with the trend. If this doesn't work, buy something else, and then work with that. And then here's US oil, and same thing. I mean, this is massively pushing down, and this is looking back. This is looking back 115-minute bar. So basically, the last 25 hours of trading. Okay, and so again, once again, you're not trading this. See, it's 2100 here. It said this waterfall was done. Okay, it drifted down to 3 a.m. There's no way I'm buying. Okay, there is a trade there in the morning to VWAP. You know, if you like to do a quick scalp, but this thing was right here, Nirvana. It pushed up to 3 standard deviations. You got a sell signal. You would have took the trade somewhere in here. Okay, you give it some room, and you just let this bad boy fall. And I mean, right here alone, I mean, you're talking 56.40 to 54.40. That's a lot of dough trading futures, okay? So there's no need to do a lot of crazy trading. Again, you're going to make most of your money, you know, an hour or two before the market opens to Europe close. Then after that, things settle down. Typically, though, if you're down going into Europe, you drift up after Europe, and vice versa. But this was showing me down. Now, you know, it's just not for this only. So now you flip over to the 2 hour, and I'll go to the SPX USD if you want to do some more of a swing kind of trading. And, you know, it's the same thing. So, you know, when you're swing trading, we're in a chop zone. You buy the blue, you sell the red, you look to make sure it's that time of day you can do these things, right? So, and pretty straightforward. Now you're starting to get these signals here. What I like to do a lot of times when you get a signal like this, I look at my faster moving average. It said don't close your trade if you're long here, okay? And then you get a second signal, and that's probably where I would have took the trade. I wouldn't have shorted it, by the way. It would have just been a close. And then you get up here, it's already toward the end of the day, so I'd be looking to just be done here. This is the overnight action on that 15-minute, and right here, just where the waterfall down for the rest of the day. You could have took it short, and that's it. You know, so it's pretty cool. I don't trade these 2 hours, but I do trade these kind of things though, and I trade them using options. So, and I took the trade here. I bought nugget puts on a breach of the 2 standard deviation and a sell signal, and that trades money good right now. So we went ahead and we bought the 40 put for Friday coming, and then we sold the 38 put underneath it, which we cleared free, and then we put the 38 put on for this Friday. So so we get a second dip of selling the put as a spread. And my expectation here is that you could have closed the trade here if you wanted to, but I decided that I'm going to stay with the trade a little bit longer, because typically when these triples break like this, you're going to get a move down even further. And I'll show you another example too. And there's another trade that I'm in. Okay, it's AGQ, same thing. And if you go out even further, you get a better picture of it as well. And so when you look at these triples, I went ahead and I shorted the 3 standard deviations of a triple. I mean, this is like a no-brainer trade. I don't care how much you love silver. I don't care how much you love any stock. When an ultra ETF breaks 3 standard deviations, and you get a sell signal to boot, it's a trade that's going to pay you. And then I threw a Fibonacci on here, and I'm looking for it to come down to hit the 31 area. And I'm also watching the moving average. Okay, so that's our system. It's really good, and we're constantly improving it to just to isolate what we call false positives, and also isolate trades that are probably higher reward to risk. And you can actually modify those in the code itself. It's a variable. You can actually say, I don't want anything that's in a chop zone. I only want to look for trades that are at the extremes. Okay, because this is not an oscillator trading system. It's really looking for trade entries, and then you manage your exit. And so you can say, hey, I'm only interested in things that are pushing way out of the band of the linear regression lines, and those are the only ones I'm interested in. I'll just scan for those all day long. Oh, and by the way, you can take this trade, and you could throw a alert on it too. So you have these right here, Trade Genius Moneymaker. You can click on it, all right, and then you can say a buy alert, or you could say I want a sell alert for it. See, or we have that diamond alert to say I want to see everything where waterfall ends. So it's pretty cool. So I hope you guys like it. Those in the room, I'll go ahead into a deeper explanation of each of the line items. Phil already did it on the crypto side. It's the same conversation. I just have a little bit different settings because of the nature of equities versus the nature of cryptos, because cryptos are continuous contract 24/7, and the futures are almost continuous contract, but they do have breaks, and so you have to modify just a smidgen to account for that. And then in the equities themselves, there'll be another adjustment as well. So that's that. I hope you guys like it. There's a lot to talk about for the week ahead, and we're going to it's going to be a great 60 to 90 days of trading. So stand by. TradeLikeAGenius.com if you're interested in grabbing anything. I know specials end tonight. You know, if you catch this thing late, you know, you can always try to beg for forgiveness tomorrow morning. But you know, it's what we charge for what you get out of this is a no-brainer. Your benefit. See you later. Bye.